investing is proven to build wealth over time. So we got to make that a part of what we do in the market as well. Hey guys, welcome back to the channel. This is Courtney with the Flex Financial Investment Group. And before we jump into today's video, do me a favor, hit that subscribe button, hit that notification bell. Of course, we appreciate you guys' support as we continue to grow our YouTube channel. And thank you guys for tuning in. So today I want to do a quick video. I just want to talk about 3 things to remember when it comes to investing in companies in the stock market. So we can't always talk about trading and making quick money, fast money. I know a lot of people are looking for that, but we got to talk about investing. Investing is one important thing that you can do. One of the most important things that you can do with some of the money you're putting into the market is invest some of it and let that money go to work, put that money to work to build true wealth over time, right? Investing is proven to build wealth over time. So we got to make that a part of what we do in the market as well. So again, I want to talk about 3 important things to remember when it comes to investing in companies in the stock market. And the first thing that you want to remember is a great business should be simple to understand. So basically what that means is you should be able to understand what the company does and how that company makes money. That is an important thing. If you're going to put your money into a company, you got to have a good understanding of what they do. And it should be simple for you to understand. And that is a key investing principle of the great Warren Buffett, one of the greatest investors in the history of the market and investors in the history of our lifetime. This is a key principle that he uses, right? Some of the businesses that Warren Buffett understands, like businesses like insurance, we might not have a great understanding of those businesses, and, vice versa. He may not have a great understanding of some of the businesses that we like to invest in, or some of the businesses that you like to invest in. He might not have an understanding of those businesses, right? I know Warren Buffett, he doesn't do a lot of investing in a lot of technology companies because he finds some of those companies kind of complex to understand, which you might be able to find technology companies pretty simple to understand. The bottom line is when you're investing in a company, you should have a good understanding of the products and services it provides, and it should be simple for you to really grasp really what they do and how they make their money. A good place to start is if you're using those products and services, that's a great place to start in looking at some of those companies that you actually buy their products and maybe starting there. The second thing that will help you when it comes to investing in companies in the stock market is a great business usually has excellent brand recognition, right? So for example, a 6-year-old can recognize Apple's brand. They can recognize Starbucks, right? If their mom or dad is always going through the Starbucks drive-through and getting coffee, they're going to recognize that brand. Definitely, they're going to recognize Disney. And of course, they're going to recognize Nike, right? They're probably wearing Nike shoes to school every day, right? So those brands, Apple, Starbucks, Disney, Nike, they have great brand recognition, right? Even if you don't personally use their products, you're going to still recognize those brands. That's a characteristic of a strong company. A great business is always top of mind for the consumers because their brands are always in front of us when it comes to marketing, and they're always going to be top of mind when it comes to whatever product or service in that area, right? For example, if you're looking at running shoes, Nike is going to be one of the first kind of brands that you're going to think about when it comes to running shoes, right? So that is a very important aspect to when it comes to investing in companies, is you want a company that has strong brand recognition. The third and the last important thing that you're going to want to remember when it comes to investing in companies is a great business sells products or services that are never going to go out of style, that are in demand now, and they're going to be in demand decades from now, right? So that is an important aspect of a company, right? They have products and services that they've been offering for years that are not going to go out of style. So, for example, 50 years ago, Coke started selling, carbonated drinks to the marketplace, soda, pop, wherever you're from, you can call it soda or pop. I call it soda. So they started selling soda to the marketplace, and 50 years ago, and 50 years from now, Coke is probably going to be selling those same carbonated drinks, right? So they're not going to be doing a lot of changes. That is a characteristic of a great company, where they're selling the same services, same products, and it's not going out of style, and there's still a demand for what they do. A lot of technology companies, they kind of struggle in this area, and semiconductor companies as well, because they always have to constantly innovate. They always have to constantly kind of update the technology that they're offering, because technology is constantly changing. It's getting faster. It's getting more efficient with time. So they got to do things that are going to keep up with the marketplace. Otherwise, another company is going to come along and replace them, because they're not keeping up with the demand for the technology. So this causes a lot of these companies, these technology companies, these semiconductor companies, to spend a lot more money innovating, which takes away from the money that could be going into the investors' pockets, because they have to reinvest a lot of their money back into the business, right? So you're going to want to look for companies that have great products and services now, that they don't have to do a lot to, and that's going to still be in demand in the future, right? So when you're researching companies to look for, to invest in, you should ask yourself, is this company selling the same product or service that they sold 10 years ago? And will the same product be in demand 10 years from now? And will they have to do a lot of updates and changes to it to keep that demand going? And if the answer is no to that, then that's probably going to be a good company to continue looking for a potential company to invest in. So as we close up here, again, to recap, 3 main things you're going to be looking for when it comes to investing. Keep it simple. You're going to want to have a good understanding of what that product and what that service that company offers, and how do they make their money. The second thing is you want to look for a company that has strong brand recognition. You can always start with companies that their product that you actually use. That's not a bad place to start there. And then the last thing you want to look for is a company that offers a product that is going to be in strong demand now, and is going to have strong demand a decade from now. Those 3 characteristics are great places to start when it comes to investing in companies in the stock market. And I hopefully this helps some of you guys out as you're looking to put money into the market to invest. Start there, start with those 3 tips, and you're going to be get going in a great direction. All right. So that is it for today's video. Again, hit that subscribe button, smash that like button, click that notification bell. Again, we appreciate you guys' support. Thank you guys for tuning in today, and we'll catch you guys on the next video. You guys have a good one.